Bitcoin takeover. What you need to know. These days, buying Bitcoin isn't done by individuals anymore. It's corporations. And not just casually, they are buying like crazy, quietly and relentlessly. Hello everyone, I'm Neil, and today's video might sound a little scary. Why? Because what is happening in the market right now isn't exactly rational. Across the globe, dozens of companies have publicly declared, "We are buying Bitcoin too." But here's the really scary part. Do you know what it is? Many more companies are buying Bitcoin quietly, without saying a word. The news we see is just the tip of the iceberg. Companies are snapping up Bitcoin, not just saying they might buy, but making moves like putting half of their profits into Bitcoin, securing Bitcoin before buying back their own stocks, deploying financial strategies that pour in over dozens of million USD every week. And their message is clear: Bitcoin is digital gold. If you don't buy now, you won't get another chance later. But isn't it strange? Even with a billion of USD pouring in, the market price barely moves. Charts look calm, even boring, like quietly sinking. That's odd. Demand is rising, supply is shrinking, but prices stay flat. All indicators say the price should be rising. Yet, strangely, the market stays quiet. This isn't just about holding steady. It looks like someone is deliberately keeping the price right there, holding it down. And this strange news? It's happening every single day now. Every day, another company announces Bitcoin purchases. And the count has passed 10, 20, 30 companies. But the news always passes quietly. And the market reacts with silence. Why? This is not a coincidence. Behind the scenes, something invisible is happening around Bitcoin. First, we need to look at the battlefield, where the real action is happening. Bitcoin started around 109.5k and moved sideways for a while, trapped in a corridor by two major liquidation zones, with short liquidations sitting above at 110.4k and 111k, and long liquidations below at 109k and 108.2k. The price then tried to break through 110.4k, but got rejected and hit the floor at 109k. It tried to rebound but hit the same support line several times before stabilizing in the same corridor. Eventually, Bitcoin collapsed further, dropping sharply to 107.4k, triggering a cascade of long liquidations on the way down. The price then managed to rebound slightly and is currently hovering around 108.3k. So, here we are, resistance zones where sellers might step in. Look at the upper part of the heatmap, bright yellow and green bars. That's where short positions are stacked like dominoes. There is a thick wall from 110.2k to 112.4k, and the strongest resistance is sitting right at 111k. That is the danger zone, and also the breakout zone. If price gets there and boosts breakthrough, we could see a short squeeze explode the price. Now, the support zone, where buyers might step in. Down below, the heatmap lights up again. 107.7k to 107k is the nearest support zone, where long positions could start holding the line. But if that doesn't hold, there is a thinner support layer lurking around 106k to 105k. Break that, and it's a slippery slope. Conclusion: Bitcoin remains in a highly reactive zone with strong resistance above and fragile support beneath. The heatmap shows liquidity stack on both sides, creating a volatile environment. If bulls can reclaim and break through the 110.4k, 111k resistance, a short squeeze could drive the price rapidly toward 112k and beyond. However, failure to hold the 107k support could send the price down to 106k and 105k zone, with more long liquidations on the way. In short, Bitcoin is walking a tightrope, and the next big move will likely come from whichever side cracks first, the wall of shorts above or the floor of longs below. Alright, time to dive into the CVD and see what the big players are really doing. First, look at the sell wall forming just above 112k. It is building up pressure. But here's the kicker. That wall hasn't been hit yet, which means the market's aware but undecided. Now, to the whales. Starting with the brown line, which represents large orders ranging from 1 million to 10 million USD. And what are they doing? observing, watching, waiting. These whales aren't aggressively buying or selling, they are just lurking in the deep, assessing the battlefield, followed by the green and purple lines representing respectively the 1,000 to 10,000 and 100,000 to 1 million orders. Still somewhat neutral, not overly active, but definitely tracking the volatility with caution. Then, red and orange lines, orders from 1,000 to 10,000 and 100 to 1,000. These are retail sellers and they are still dumping. The volume shows consistent selling pressure, which usually means fear, frustration, or panic. So, what's the takeaway here? The whales are sitting tight, calculating, letting retail bleed out, and the sell wall above? A potential trap, waiting for price to drift up and then slam it back down. Retail? Still exiting, still fueling the fire. In short, this is a patience game for the whales, and when they finally move, the whole market will feel it. Because it is important to grasp, and I will repeat myself there, but buying Bitcoin isn't a game for everyday investors anymore. At the center of this shift is a new type of player. Before, individuals moved the markets. Now it's not individuals, it is corporations. And not just any companies. These are giants managing billions or even trillions in assets. Take MicroStrategy for example, my favorite example. This isn't a one-time stunt. They hold 580,000 Bitcoin, and that's almost 3% of Bitcoin's entire supply, held by just one company. Or Metaplanet, a Japanese listed company which bought 2,200 Bitcoin in just the last 2 weeks. They are not just talking, they raised funds through stocks and immediately bought Bitcoin. Their goal? To hold 21,000 Bitcoin by 2025. And DG Asia, an Indonesian fintech firm. They raised 100 million USD recently and announced they will spend half their future profits on Bitcoin purchases. Their stock soared on that news. Profits realized, then reinvested back into Bitcoin. They see Bitcoin not just as an asset, but as a safer strategy than cash. Bitcoin is no longer just an investment. It's now part of a corporate financial strategy. Not just part of assets, but part of how companies operate. And this is just the beginning. What we see are public listed companies, the ones required to disclose purchases, the ones that appear in the news. But what about private companies, family-owned conglomerates? They are quietly scooping up Bitcoin without a word. We just didn't know about it before. I can't name them here, but there are at least 3 huge companies quietly buying behind the scenes. We are witnessing a fundamental change in the game's rules. Bitcoin is shifting from a personal asset to an institutional stronghold. And in that structure, our opportunities are shrinking. The companies making headlines, they are just the tip of the iceberg. The real accumulation is happening in silence. Why? Because public companies must disclose purchases due to SEC, financial authorities, and audits. But private companies, family offices, private equity, quiet asset managers, they never say a word. They just buy, quietly and in volume. Most people don't realize it, but IKEA is a private company. No one knows what they are buying or holding, and there are hundreds of thousands of companies worldwide like this. Do you really think some of them aren't buying Bitcoin? The companies we hear about publicly are the ones forced to talk. The scary part? The ones who don't have to talk are already in. The market looks calm on the surface, but behind the scenes, circulation is quietly being swallowed up. And this price level we see now, it's not because demand is weak, it could be intentionally suppressed. What if beneath the surface, huge hands are quietly draining the market right under our noses? It might look peaceful now, but when the market suddenly jumps, the available Bitcoin might already be gone. And when that day comes, we will be left standing in a world with no Bitcoin left to buy. Bitcoin is no longer just a trend. What companies feel is not opportunity, it's fear. Specifically, the fear of collapse. The fear that if they don't prepare, they could fail. The amount of Bitcoin left on exchanges, it's been dropping steadily since 2020. And recent figures show it's not even lower than 2016, when Bitcoin was under 10,000. What does that mean? The available Bitcoin on the market is seriously insufficient to meet demand. When an institution buys thousands of Bitcoin, do those coins go back into circulation? No! They get locked away, stored securely. And as locked Bitcoin increases, the remaining supply becomes rarer and more expensive. This is just basic supply and demand. Right now, demand is rising, supply is locking up. DG Asia is putting up to 50% of their profits into Bitcoin. MicroStrategy keeps buying massive amounts. BlackRock analysts say not holding Bitcoin is riskier than holding it. Is this just value investing? No, it is structural change. As the old monetary system collapses, companies are preparing for a digital gold standard. This is not FOMO, it's fear of collapse. When the old system falls, the gap between those prepared and those who aren't may never close. What will happen if this continues? Imagine just one more month at this pace. What do you think will happen? You will probably hear another company bought 1000 Bitcoin, another 2000 Bitcoin bought half their assets now in Bitcoin. But this is not just another purchase. If this trend continues, even with one company entering per week, in 3 months nearly all Bitcoin on exchanges will be gone. Why isn't Bitcoin's price rising? Because it is still the accumulation phase. Institutions know this is the last chance. That's why they are buying quietly, quickly, and decisively. And one day, once this accumulation reaches its limits, the market will explode. But by then, we might not even get in. Why? Because there won't be any Bitcoin left. Imagine 10, 20, or 50 companies buying Bitcoin, and by September, over 75. Even if half of them declare purchases, the market won't have room for ordinary buyers anymore. Right now, this is the last chance for individuals. When tradable Bitcoin disappears, it's not just price that goes up, the opportunity itself vanishes. When that time comes, the question won't be why didn't you buy Bitcoin, but how will you buy Bitcoin? This trend will not stop. It can't be reversed, because it is not just a few companies. The entire industry structure is shifting. American giants are joining, Japanese, Indonesian, and European companies too. Even governments are starting to buy Bitcoin. The market usually moves fast, but right now it's moving fast and incredibly quietly. Why? Because this isn't an open bidding war, it's a silent takeover. And will this stop? No, never. Once companies enter this structure, they can't stop. Think from their perspective. They've already spent billions on Bitcoin. They need to buy before prices rise further to boost returns. A future will come where not holding Bitcoins means falling behind. This is no longer a choice, it's survival. From now on, companies will be divided between those who have Bitcoin and those who don't. And we are no different. Will we be at the front line or locked out? Right now, we are at a moment to move. The flow will not stop. Only those prepared will survive. Thank you for your time watching this video. That was Neil, and as always, stay sharp, stay informed.